Hello, R2F here with another Trade Like a Sniper video where I use a top-down analysis approach to frame a trade on a lower time frame. And this is all done using ICT's concepts. Okay, this is how I build bias, and this is how I build narrative and enter trades. Without further ado, let me scrunch up the chart. I'm starting on the 3-month time frame, by the way, and using the US government bonds 10-year yield from TVC data. I have my daughter with me at the moment, so excuse any weird noises. So it goes all the way back really far. Let's not go too far. Let's start from here. Okay. So we're in the 3-month time frame, and it looks like we've respected this gap here. And we're heading up somewhat, respecting that order block, I mean. So we have a monthly gap, a 3-month gap, and we're going up. So let's just fast forward a bit. Okay, let me see. Okay, so we had a 3-month close below this gap. Nice breaker here. So let me go down to the monthly to see if we can find a trade. The price bars are based on percentages, by the way, for the government yields. However, ICT's concepts still work in this situation. So, well, let's see if they do, right? Okay, it's a bit more choppy than we would like. So what was I looking for on the 3-month? I was looking for price to... Did it just already happen? I was looking for price to come and use this 3-month gap as resistance to go lower, but it seems that it already did. It didn't just now. I changed time frames, and now it kind of showed that it already did. Whatever. Just go back to the weekly. Yeah, right. We saw the candle in here, and what I intended for was to use this as support. Resistance. Okay, if the week can come into this gap, we can take a short. Stop above this high. Targeting these lows. Okay, it did come into that gap. Are we targeting this lows? Back to this order block. Back to this order block. All right, so now we're transiting on to a higher time frame, back into this area. So we should see some bearish movements as we transpose the time frames. And oh, there we go. Took out that low. So if we go back on the 3-month, see what we wanted to happen. Okay, on the monthly, weekly. Sorry, let me set the visibility to the monthly time frame. Yeah. Yeah, initially we wanted to get in somewhere here, but not possible. Right, resistance, previous support, took out the high, took liquidity, broke down, nice down candle here, which adds more confluence as a breaker. Trade into here. Next point of liquidity is down here below this low, huge candle. Okay, so yeah, pretty simple, pretty straightforward in this instance. And yeah, that bagged a 1.43R. It would have been more if we caught it a bit higher, but 2007, I can't go to a lower time frame. But if you could, then you can definitely catch higher RRs, and you get this. You got like almost 1 year full of bias basically to catch trades, and you can always go to lower time frames to catch trades in between. But don't go too low lest you get confused on what um, bias you're supposed to have. Okay, so always refer back to the higher time frames. And yeah, we came all the way down, took out these equal lows, although this goes back to 1941. I don't know the relevance there, but yeah, it went to pretty low, and now we're somewhat expanding higher. Go back to the 12-month. Nice 12-month gap here. If we do come back here, I'd be keen on taking a long. So yeah, that's it. Hope we found it insightful. It's a really short one, so see you next time.